it's really important for individuals to know where do they want to buy. And once they know more or less that region, if they find something, the ability to move quickly is going to be the difference maker, whether they get that property or not. And I think that's where we can play an important role in that by helping a customer get prepared in advance. And then when they're ready, we go through this process quickly and make sure that they get the home that they want.
What are some of the sort of onboarding information that you would provide to potential clients?
I think an important thing to consider is, what's it going to take to be able to qualify for a loan? What we really like to see is at least 30% down payment to be able to qualify for a mortgage. The other thing that we want to see is at least 12 months of reserves. What are reserves? Well, if it costs you $5,000 a month to carry that property, we want to see at least 12 times that in account to be able to know that there's enough there to be able to service the loan. And as long as those qualifications are met, and making sure that you have a bank account, if you have a bank account in the US, and if you don't, then we can recommend how you can get one set up. That makes it easier to process monthly payments. It alleviates a lot of the back and forth and trying to find someone to make a monthly payment. So that's an important consideration. And really just understanding from a consumer's perspective, getting pre-qualified with us so they know what they can afford, so that they're shopping in the right price point. And then when they find something, they can move quickly because the market is still competitive for properties that are priced attractively. And we expect that in spite of rates moving around and potentially going higher, we don't expect there to be a tremendous amount of inventory out there. So it's really important for individuals to know where do they want to buy. And once they know more or less that region, if they find something, the ability to move quickly is going to be the difference maker, whether they get that property or not. And I think that's where we can play an important role in that by helping a customer get prepared in advance. And then when they're ready, we go through this process quickly and make sure that they get the home that they want.
Right, because often real estate is a matter of timing, and you're there to help with the timing to hit the ground running to make sure that you don't miss the opportunity while things are being processed and organized.
Yeah, many buyers are looking at competing offers. So they may be looking for an offer from a US person that needs financing. They may be looking at someone that doesn't need financing, so it's an all cash offer. And then they may be looking at an offer from someone from Canada that's coming and saying, well, I can afford this. I may be able to pay it in cash. It's really helpful if they have something from a lender like us with a pre-approval letter that makes them feel confident that this transaction is going to happen. And then we've built trust and credibility in the market that if we say we're going to do a loan, we ultimately do close that loan. And that gives that realtor and that seller confidence.
Mm-hmm. And you mentioned, it's important for Canadians to be aware of the fluctuating interest rates right now. What about currency conversion? Because you mentioned it's also good to have a bank account in the United States. And that number of what a Canadian dollar is worth on the other side of the border has been all over the map in the last few years. To what extent is the actual currency rate a factor? And how do you advise clients to work around that extra complication?
Yeah, I think definitely the element of currency fluctuations is an important consideration, and one that I think leads to, if someone from Canada knows that within the next 6 months they want to buy a home in the US, I think it's important to start preparing themselves and converting some of that into dollars, keep it in an account in Canada or open up that bank account in the US and start to transfer money there. Because one of the things that we are going to look for is at least 2 months of bank statements to show the liquidity necessary for the transaction. The other thing that we're going to look for is when they do put in an offer, they're going to be asked to put some type of deposit and something in escrow to guarantee that they have the desire to move forward with that transaction. And that's likely to be in dollars. So it's easier if they have an account already with dollars that they've converted. And then that way they're ready for the transaction. So it's really hard to speculate on currencies, but it definitely does seem with today, with the way that rates are rising in the US, is that the dollar will remain strong. So for someone that wants to do this, I would say that it's probably suggested that they do this sooner than later and be prepared for a transaction like this, which is likely to be a larger sum of capital required to do.
Mm-hmm. And is this potentially another place where crypto assets can help smoothen that gap, or does that only add more potential volatility?
I think in some instances, we work with individuals that have USDC, which is a stablecoin, and that digital currency is pegged 1-to-1 to the dollar. So I think it depends in Canada. I think it'll be dependent for most individuals. But Canada is one of those markets that has a very developed banking system. So it may not be as difficult for someone there that has their currency to be able to send a wire to the US and have it converted. Someone in another country where there are currency fluctuations and currency controls, something like that might be more important to think about. But I would definitely be thinking about it from a stablecoin perspective and less so around, I'll take my Canadian dollars and buy Bitcoin, because now you are experiencing a different type of currency volatility.